How interest rates control entire nations. What if I told you that one tiny number, just a few percentage points, controls the rise and fall of entire nations? Welcome to the invisible power of interest rates. It may sound boring, but behind every economic boom, every crash, every bailout, there's a decision made in a quiet room by unelected bankers, adjusting a number that changes your life. Let's break it down. Interest rates are the cost of borrowing money. When they're low, borrowing is cheap. People take loans, businesses expand, housing markets boom, stock prices soar. But too much borrowing causes inflation. Prices rise, money loses value. That's when central banks hit the brakes. They raise rates. Suddenly, loans cost more, mortgages get pricier, spending slows, inflation cools, but the economy may stall. Now scale this to a national level. Countries run on debt, to build, to invest, even to survive. When interest rates rise, their debt payments explode. Budget cuts follow. Austerity kicks in. Unemployment rises. And in some countries, revolutions begin. Argentina, Greece, Turkey, Sri Lanka. They've all seen governments collapse because interest rates made borrowing unsustainable. Here's the twist. In 2022, the US and other central banks raised rates at the fastest pace in history. Why? To stop inflation. But the world, so addicted to cheap debt, started to crack. So who decides these rates? Central banks, not voters, not presidents. Just a group of economists and bankers. Whose choices ripple across your rent, your job, your groceries? What can we learn? 1. Interest rates are a nation's heartbeat. 2. Debt is power, but also a trap. 3. Understanding interest rates isn't optional. It's survival. They may look like numbers, but interest rates are economic weapons, and your country's future may depend on them. Subscribe for more jaw-dropping stories of power, money, and the hidden forces shaping your world.